What up, people? Welcome to Wealthy Wednesdays. Y'all know every Wednesday we answer your questions live, and we typically cover a topic, right? A money topic, right? We always getting some feedback. We always have to cover topics. Also love to answer your questions every Wednesday, 8 p.m. here. I'm Kamari Ellis. This is the Finance Rebel Show. So again, we're going to get into it. So today's topic is how to invest like a college endowment fund. Again, how to invest like a college endowment fund. A lot of times we think about stocks, that hot stock, right, that everybody's got, stock ran. But a lot of times we're not thinking about investments and generally from a holistic perspective. And so last week I talked about asset allocation, especially for everybody who is really nervous about what's going on because we've seen the markets run down year to date, right? We're down about 9-10%. And a lot of people have been hitting me up about their 401k plans, pension plans, and what their overall plans are going to be for retirement. And I said, well, now's a good time to go back through and check on your asset allocation. Now's a good time to see if you are over leveraged or under leveraged or overexposed or underexposed in certain asset classes. And that's where you need to be rejiggering and working at, right? And so I wanted to talk about that a little bit more. So we talked about that last week. And this week, I wanted to show y'all a real live working example of asset allocation and how it's used at the highest of levels, right? So one of my favorite movies is A Devil in a Blue Dress. Devil in a Blue Dress by Walter Mosley. And Denzel's in this movie with a lot of other greats. Denzel, what's my man's name? Don Cheadle was in it, many others. But there's a line in Devil in a Blue Dress that always sticks out to me. He said, this is Denzel speaking. He said, when I get involved in something, my daddy always said to get involved at the very top of it, right? Go to the very top. And that's where you can see where everything's going on, who does it well, who has control, who's not doing it so well, but it gives you perspective on what's going on with everything. So what I wanted to do is show you all who's at the very top of the pile, or at least one of the very top of the pile. And that's Yale's endowment. Now, there's many others, and I'll show you that a little bit later, who really have amassed a whole bunch of assets to have kick butt returns. But there's one gentleman in particular who kind of is head and shoulders above everybody else. His name is David Swenson. He's the chief investment officer at the Yale Endowment Fund. And I've been kind of chronicling his life, or his career rather, for over a decade now, probably more like 15 years. And this guy, he gets to it. Now, it's not spectacular returns. It's not 100% returns out the box, but they're consistent. And there's not many negative years. I don't even think there's any negative years. I know for one period from like 1998 to 2009, there were no negative years. He didn't lose money at all. Now, I know everybody loves to talk about Warren Buffett and some of the many others like the Carl Icahns and a few others. But this guy is kind of a hidden gem because he's not a high profile, right? He does it for a university. He's kicking it there. He's not necessarily trying to get on the front page of things. All right. So as we go through it, I'm Kamari Ellis. Do me a favor, y'all. Like, comment, and share this out. We're always fighting against the algorithms to get a little bit more exposure so we can help more people, right? This channel, this show is all about helping people understand money a little bit better, a whole lot better if possible, right? We cover taxes, stocks, business, economics. If it's about money, we talk about it here. All right. So let's get into the show, but let's do our hellos. Why it looks like everything's slow today. It looks like everything is slow today. This is weird. Okay, that's working. Looks like it's glitching. All right, Jose is in the building. Welcome, Jose. I am surprised that it's just Jose in the building right now. I'm sure there's more. But listen, if you're here, do me a favor, announce yourself. Let me know where you're hailing from, and let me know if you've ever thought about asset allocation before. Now, I do have a question before I get going into today's topic. right? I've been doing daily videos on YouTube and Facebook. And so I was thinking about it. Maybe I need to bring back Wealthy Conversation Saturday versus our Wealthy Wednesday. So if you would tell me, well, one, how do you feel about the daily videos? Have they been helpful to you? Right. And two, what would you think about bringing back Saturday? So instead of our Wealthy Wednesdays, we would move Wealthy Wednesdays back to our Saturdays. So if y'all been rocking with me for a minute, you know we should do Wealthy Conversation Saturday. So chime in the chat and let me know what you think. Now, as always, Wealthy Wednesdays is dedicated to answering your questions, your money questions. So if you have any money questions, go ahead and throw them in the chat. Put a Q in front of them so we can keep track of them. So as we come back, I can get to them quickly, and I don't have to go back through and see who's having a conversation with everybody else in the chat. I can get to them fast. But just remember, those are the questions of the day, right? What do you think about bringing back Wealthy Saturdays? Put your question in the chat, and I would love to hear from you. All right, Jay Jones is in the house. Now, am I saying your names right? Is it Che? Is it Chai? Let me know. All right, Kevin's here. How are you, Kevin? Welcome. Music Man. All right, now the comments are starting to roll through. Music Man 1982 is here. I don't know, something was going on with these internets. But like I said, we're going to get the party started. And again, today's show is all about how to invest your money like a college endowment. And who would that be good for? People thinking about retiring, people who want to manage a portfolio, people who want to do generational wealth. Who's doing generational wealth? College universities are definitely doing generational wealth, right? But what is an endowment? All right, so I'm going to start off there. What is an endowment? Just so everybody can be on the same page as we go through all of this. Oh man, JT Coins, you spoiled me. Thank you, sir. Thank you for the super chat. Hello to you as well. Appreciate you. Appreciate all your support as well. All right, so let's get to this, y'all. Let's get to this. All right, so I'm going to show you an example from Michigan State University, right? This is the College of Law, and they're talking about what is an endowment. All right, and so here, let me blow this up a little bit just so everybody can see it. Oops, that's the wrong one. I'm hitting the wrong button. I'm hitting the wrong button. There we go. All right, so endowments. We're talking here about investment in the future. While all gifts to MSU Law contribute to the high quality of education, endowments are particularly meaningful as they offer a dependable, perpetual source of funding. The investment made with the creation of a MSU Law endowment. Now remember, this is just an example from a law school, but you have endowments. The University of Pennsylvania has an endowment. Harvard has an endowment. Howard has an endowment, right? There are endowments in a lot of different schools. So don't get caught up that this is law school. This applies to any university. And again, you can take these same principles and apply it to your overall investments as well. All right. So the investment made with the creation of an MSU Law endowment provides the type of support that makes a real difference in the lives of our students, faculty, staff by enhancing their education, research, daily work, and academic excellence. All right. Endowed gifts enable MSU Law to offer a truly world-class experience. Okay. Now here it says, leave your legacy. And actually, I had something else I wanted to show y'all. But how does an endowment work? Endowed funds differ from others, and the total amount of the gift is invested. Each year, only a portion of the income earned is spent, right? So the endowment generates income. They only spend off some of it. So an endowment is a fund of money, a pool of money where previous alumni and other people contribute to it. This pool of money generates income, but they only spend a small portion of it. They don't spend it all because they want it to last forever, right? All right. So Endowed funds differ from others in that total amount of the gift is invested. Each year, only a portion of the income earned is spent, while the remainder is added to the principal for growth. Now, if you're thinking, this can kind of be like retirement money, right? Or money you want to leave to the next generation. So keep that at the top of your mind as we go through this. In this respect, an endowment is a perpetual gift. MSU law endowments begin at $50,000. Don't get lost in the amount, y'all. Funded fully at its initiation or made as a pledge, payable over up to 5 years. Donors may contribute any amount to an existing endowment program or pool resources, while other like-minded individuals or companies to create a new endowment. Following is an example endowment gift. All right, so this is a gift. This is an example of how some of endowments work. They're all different. An MSU law alumni makes a $50,000 gift to establish a named endowment scholarship in memory of her husband. 2, a gift arrangement is drawn up between MSU law and the donor to guarantee that her gift will be added to the MSU Common Investment Fund and used solely for its stated purposes. The donor names scholarship funds units in the MSU Common Investment Fund, just as an investor buys shares in a mutual fund. All right, keep that in mind. MSU's investment office invests the donor's gift across major asset classes and the university's portfolio to maximize long-term total return within acceptable levels of risk. Now, if y'all remember, I'm always talking to y'all about risk management as it relates to investments. Here, this organization is talking to you about risk and how they manage risk when it comes to their investments. Any real professionals dealing with investments have to talk to you about risk, have to understand risk. All right. So long-term total return within acceptable levels of risk with the investment policy parameters invested by the MSU Board of Trustees as advised by its investment advisory subcommittee. A predetermined portion of the income earned is used to provide a scholarship for one MSU law student per year per the gift arrangement instructions. The fund's principal remains intact. The remainder of the income earned is reinvested in the named fund's principal as a hedge against inflation and to generate growth. All right. The named fund continues to grow, ensuring future scholarship support. All right. So again, I talked about this is very similar to what you need to be thinking about when it comes to retirement. Another thing is there's churches all throughout the Black community. So my audience is Black. We go talk about what's going on in our community. You know how you kind of have a building fund, or most churches have a building fund? Well, they can kind of be managed like an endowment because a church building fund is always going to need money, right? Roof, utilities, unexpected things, acts of God. This is another way of kind of looking at it, or how you can manage fund to make sure that the building is being taken care of. However, it's got to be funded. Money has to come into the fund or the building fund or the endowment, whatever name you want to put on it, in order to fulfill its mission. And so in this instance, the mission is to make sure that the building is being taken care of. Same thing for an endowment, right? Just wanted to give y'all that example. So as we go on and we talk about that, the internet is acting really wacky today, y'all. I don't know what's going on. I see that there's another super chat. I don't know who it is, but I appreciate it. I will definitely get to it at some point when the internet shows me a little love. So let's see. All right, so just going on. So that was an example of Michigan State, right? So I just wanted to put y'all in the mind frame of what an endowment fund is, what it looks like, and then also how that same ideology or philosophy can be applied to your investments, your community's investments, your church investments, your family's investments, however you want to do it, right? So I wanted to look at something, though, really quickly, because as we talk about endowments, y'all know this, like I'm a really big HBCU fan. I always wanted to go to Howard, couldn't go for various reasons, But y'all see here, I always love to big up my my HBCUs, right? Because they're black businesses that support the black community. But when you look at some of the endowments for our major universities, it's rough out here. It's rough out here. So I found this publication called The Plug, and they ran this report. So it says Howard University has the largest endowment of any HBCU at $712 million. $712 million. South Carolina State University's endowment increased in a whopping 1100% from 2015 to 2022. To 2020. Simmons College of Kentucky's endowment decreased from 102 million in 2011 to nothing in 2020. So it just goes to show. Now here they have a listing. So it shows Harvard's endowment, which is over $40 billion. And all HBCU endowments is what's the number here? It's less than 2 billion. I actually ran the numbers before myself. All right, let me see. Here it is. Well, no, this is different. This talks about Mackenzie Scott. So Mackenzie Scott, after the murder of George Floyd, gave a total of $556 million to HBCUs from July 2020 to December 2020, with several schools putting portions of her millions towards their endowments. Right. But let's look at this here. The top 10 largest HBCU endowments, again, Howard, 712 million, Spelman, 377 million, Hampton, 280 million, Meharry, 179 million, Morehouse, 157 million, Xavier, 147 million, Tuskegee, 123 million, Alabama State University, 111 million, Morehouse, 108 million, Dillard University, 92 million. Harvard, 42 billion. So basically all of Harvard's endowment is larger. Harvard's endowment is larger than all HBCU endowments combined. If you want to talk about a great illustration of the wealth gap, I think this is it right here. This is it right here. And with that comes a lot of other issues: inadequate education, inadequate funding, Black students having to struggle more. And I know somebody's going to come and say, well, there's non-Black students going to HBCUs too. That is true. But the majority, like 95 to 99%, are Black. So we'll stick with that. So I just want y'all to think about that. I want y'all to keep that in the back of your mind. And I just realized that I didn't blow up the screen. So I want y'all to see this like I'm not just making these numbers up. So you can see this here again: Spelman, Howard, Spelman, Hampton, Meharry, Morehouse, Xavier, Tuskegee, Alabama, Morehouse, Dillard. Less than $2 or $3 billion. So that's crazy right there. That's crazy right there. All right. Now, I want y'all to keep that in mind. I want y'all to keep that in mind as we go through this, because here's another list of endowments that I want to show you all and how crazy it is. So the top 20 largest college endowments: Harvard University. Oh, this one says 52. It is so okay. This is fiscal year 2021. Almost 52 million. University of Texas, 52 billion is the endowment. University of Texas is 42 billion. We're not in millions anymore, folks, so excuse me, right? Yale University is 42 billion. Stanford University is 37 billion. Princeton, 37 billion with a B. MIT, 27 billion. The University of Pennsylvania is 20 billion, almost 21 billion. Notre Dame is 18 billion. Texas A&M is 18 billion. University of Michigan is 17 billion. Northwest University is 14, almost 15 billion. Columbia, 15 billion. Washington University, 13 billion. Duke, 12 billion. Emory, 11 billion. Vanderbilt, 10 billion. University of Michigan, University of Virginia, 10 billion. Johns Hopkins, 9 billion. Dartmouth, 8 billion. And Rice University, another $8 billion. So again, we can see the disparity between PWIs, right? I want to blow this up for y'all. PWIs, predominantly white institutions, and HBCUs. So again, I want y'all to see this because it's real out here. Again, this is another example of the wealth gap in play, full in color. So you can look at these universities and just see the resources they have at their fingertips. Not only at their fingertips today, there's enough money in here that is truly generational wealth money, that money that will span over not just for today's students, but tomorrow's alumni, next generation's alumni. And so I just wanted to give some color to all that. I wanted y'all to think about all that as we go through this, right? Again, this is the Finance Rebel Show. We are here for the Black community. So I wanted y'all to think about this. Now, the people who are at the top of the list, you saw the Harvards, the University of Texas, and the Yales. We're going to focus on Yale today because the person that runs their portfolio, their chief investment officer, David Swenson, has been doing this for a long time. Long time. So I just want to show y'all something real quick, and then I want to show y'all a brief video. So I want to show y'all some of the highlights for this endowment over the last couple of years. Oops, there we go. Let me blow this up. So this is Yale's endowment. So this is the endowment highlights. So the market value in 2020 was 31 million. They had a return of 6.8%. I know some of y'all are like, that's not really sexy. Just stay with me for a minute. 2019, 5.7%. 2018, 12.3%. 2017, 11.3%. 2016, 3.4%. Haven't seen a losing year yet. Now, when you look at some of the things that they invest in, they have absolute return. Now, absolute return is a strategy. And absolute return, they're looking to never have a losing return or a losing year. I used to actually run an absolute return fund where we modeled or we took ETFs and we replicated college endowment funds. And so that was our job, and we kind of did it through absolute return strategies. Domestic equity, foreign equity, leveraged buyouts, natural resources, real estate, venture capital, and cash. And so when you look here on the side and you look at some of these numbers over here, these numbers make up what percentage of the portfolio is allocated to each one of these strategies. And so it's not just a stock. There's strategies within this portfolio. It's not just a stock. It's strategies within the portfolios. And I know some of y'all are like, well, I don't have $52 billion like a Harvard or a Yale has, or $30 billion like a Harvard or Yale has, but you can still do the same thing. Now, if any of y'all, again, are familiar with ETFs, there are ETFs that some of them, and I don't recommend this, right? This is not investment. This is not investment advice. This is not a recommendation to buy or sell. Okay. This is for entertainment and educational purposes only. But you can take some of the same strategies and apply it to your overall portfolio. You can take some of the same strategies and apply it to your church fund or your church scholarship fund. Or if your church has an actual endowment, you can do the same thing. Or if you work with a school, right, a college or some of the smaller schools, you can utilize some of these strategies as well. Now, these were the percentages that were allocated to absolute return in 2020, right? 21.6%. 2.3% was dedicated to domestic equity. 11.4% was dedicated to foreign equity. For leveraged buyout, 15.8% of their portfolio was dedicated to that. Natural resources, 3.9% was dedicated to that. Real estate, they had 8.6% of their portfolio invested into real estate. 22.6% was invested in venture capital. And cash, again, was 13.7%. So that is their asset allocation. That is how they're allocating their money. That is how they're putting their money to work in 2020. Now, I'm going to go back to it real quick, but I just wanted to drum that home. Like, you can have different strategies within your portfolio, and you can actually mimic this by using ETFs, sometimes mutual funds. It really just depends, but you can mimic the same thing. Again, it's not just about one stock. It's not about chasing the hot stock tip. It's really about what strategy are you getting to it, and then understanding the strategies and the characteristics of the strategies and how they move things. Now, let's go back to it. Now, that was 2020. Now, let's go back to 2016 here. All right, let me blow this up a little bit for y'all. Do me a favor, put a 1 in the chat if you can see this, if you can see it well. I don't want to be showing y'all this. And for everybody that is on Instagram, you might want to go on over to YouTube because I'm showing some charts. And for those who are watching the replay as well, or listening to the replay, it's being live on YouTube. I'm going to try my best, though, to communicate what's going on here on the screen. Now, going back to 2016, they allocated 22.1% to their absolute return portion in their portfolio, 4% to domestic equity, 14.9% and foreign equity. So you see these weightings are moving. They are not static. So they're reacting to what's going in the marketplace, and they're making a determination on how to invest their money. But again, it's not just based on a stock, right? How well Apple's doing, how well Tesla's doing, how well Amazon's doing. Again, if you watch me live today for the daily number today, I announced that Amazon is doing a 20-for-1 stock split. And they're also reinvesting, or doing a stock repurchase of $10 billion. In this scenario, they don't care about any of that stuff, right? So keep that in mind. Keep that in mind, y'all. All right, so again, back in 2016, leveraged buyouts, 14.7%. So they put 14.7% to investing into leveraged buyout strategies, 7.9% to invest in natural resources, 13% into real estate. Now, this was 2016. And in venture capital in 2016, they invested 16.2% of their money in venture capital. And then he had cash of 7.2%. Now, when you look at their return that year, it was 3.4%. And so every year that the asset allocation changes, you will see the return change. Now, there's some stats out there that will talk about 91% of your portfolio is tied to your asset allocation. And so every year that Yale's asset allocation changes, you'll see a different rate of return generated by the portfolio. All right. So let's see here. Got a couple new people here on IG hanging out with us. Davita's here, my tax sister. Creations by Naisha. How are you, Naisha? Nikki's here. Blue Bank Stole's here. 1AM21's here. And Mango Frizzy's here. All right, welcome. All right. And everything is like delayed today. I don't know what's going on. Oh man, Kevin Garland, $20 super chat. Thank you. Appreciate you. Now, for all my IG people, you might want to pop on over to the YouTubes and watch me over there, because I got some stuff going on the screen. And again, I'm going to do my best to communicate it, but you might want to hop on over to the YouTube. All right. Is that Ugly Mona? Ugly Mona, you ain't ugly. Ugly Bunny says, I have watched 3 or 4 of your episodes and I love your shows. Oh, thank you. Thank you. Thank you. I appreciate that. Thank you so much, Miss Phyllis. Appreciate you. All right. Midnight Green. All right. Good evening, Financial Reverend friends. Good evening to you as well. All right. Kevin Garland said, well, all right. All right. Kevin Garland says, never succumb to anecdotal experiences. That is correct. That is totally correct. All right. Got some more coming in. All right. One personal experience does not disprove the norm. That is correct. All right. Hey, Bazita, how you doing? How you doing? Welcome, welcome, welcome. Thank you for being here. All right. So Kevin can see this. Ugly Mona can see this. Rosie, hey, Rosie Kimmins, I believe it is. I hope I'm saying your name right. If I'm not, please charge it to my head, not my heart. All right. Midnight Green can see this. All right. Perfect. 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 All right. So we want to keep going along in this, right? So hopefully y'all getting some value from this. If you are, do me a favor, share this out, subscribe to the channel. And make sure you hit the notification button as well for when I go live and when new videos are uploaded to check it out. So again, asset allocation can be really, really powerful. Now I'm showing you how the quote unquote big wigs are doing it. Ever wonder why you're not doing it? Why you're worried about the hot stock tip? Now, if y'all go back and do some research, you'll also see that a lot of folks who follow hot stock tips are doing some illegal things. So make sure y'all stay out of harm's way. Make sure y'all stay out of harm's way. Right. So Kevin says they went from investing real estate as their 5th largest investment in 2016 to their 2nd in 2020. That is correct. And there's a whole process for how and why they do that. They don't just kind of do it willy-nilly. They understand the asset class, because all of these things, right? All of these, let me go back to it. All of these strategies or assets, they're part of their asset allocation. They all have different characteristics or attributes. They all act different ways. Now, when you look at domestic equity, that's just the basic S&P 500. They've been investing more in foreign equities than they are in domestic equities, right? Your Nestle's, your Samsungs, any companies that are based and founded overseas, they're investing more in those than they are your regular companies here in the United States. Got to ask yourself why. You got to ask yourself that question, why? All right. Now, there's a video I want to share with y'all as well with David Swenson. Again, he's a rock star, but not really known that much. But that's why I wanted to start bringing y'all some more stuff, right? That for folks who really, really do this investment stuff, not for some of the social media gurus. And just, again, really show you what's going on. Now, they also have targets. So I want to show y'all some of the target listings they have as well. So in June 2020, right, their target for absolute return was 23.5%. For equity, domestic equity was 2.25%. For foreign equity was 11.75%. For leveraged buyouts, it was 17.5%. For natural resources, it was 4.5%, so forth, and so on and so on. But when you look at what it actually was, it was 21.6%. So on the right, the target, that's the strategy. That's what they were looking to do. On the left, the actual, that's what actually played out. And that's what tactically they were working towards. Now look at cash. Look at how much cash they plan to have. How much cash they plan to have was only 7.5%. But then they wound up having 13.7%. Now, can anyone do a quick calculation on 50 billion times 13.7? Because that's 13.7%. Because that's how much cash they had. That's a lot of cash. A lot of cash. This is also, right, this is also a great example of the power of group economics as well. Because each one of these people are putting money into a pool, and they have somebody else investing the money that they trusted. Now, again, it's not Ray, Pookie, and Aisha and them that are running the money, right? But they have qualified folks who are running the money. They trust them. It's for the school, it's for scholarship. But again, these principles are transferable. You can do this with anything. And so you hear some people that poo-poo group economics because they think it's only a black thing. No, it's not. But they poo-poo it because they say black folks can't work together. Well, the right black folks can, right? And maybe it's not just about everybody coming to the table. You might just have to start off with a small group and then work your way forward. But this is definitely an illustration for group economics, like a real live working practice of group economics. So keep that in mind. Keep that in mind. All right, so just wanted to show y'all that. There's a couple other things, and then we'll get to the video. Then we'll get to any questions. So any questions you might have, go ahead and throw them in the chat. Put a Q in front of them so I don't misconfuse them or they get lost in some of the conversation. Just give me 1 second, y'all. There was a couple other things I wanted to show y'all. All right, so yeah, this is what I wanted to show y'all. Give me 1 second. Un momento. So Yale they use about 8 asset classes, right? So now you can see what they were investing in and some of their thoughts around it. So here, Yale has 8 asset classes. They're defined by differences in their expected response to economic conditions. So Yale has already thought about what's best in play for high inflation times. Yale has already thought about what's best to play for war times or geopolitical uncertainty. They've thought about all that already. They're not chasing hot stocks. They're thinking about where the economic cycle is, right? If we're in a boom cycle, if we're in a recession, if we're in a depression, and what's the best way to allocate their funds to make money, not necessarily knock it out of the park and get 1,000% return. You saw some of their returns were 3%, but they ain't had no losing years. And I want to show y'all some more stuff too. So make sure y'all stay with me. All right. So the capital markets assumption detail for each asset class below incorporates assumptions about a university's ability to add value through active management. So this whole team, right? You have active management. Let me do this. You have active management and you have passive management. Now, this is the part where maybe not everybody, just being totally honest with y'all, maybe not everybody can do is be active managers because that takes a truly active approach to managing your funds. But you might be able to mix a little passive in there, and that's okay. And that's okay. All right, so here we go. In July 1990, let me put it back up on the screen for y'all. Yale became the first institutional investor to define absolute return strategies as a distinct asset class. So homework for y'all. I want y'all to look up absolute return strategies. And basically, absolute return is most times people are talking about relative returns, how their money is doing versus, let's say, the S&P 500. And so they want to see if you are beating the S&P 500 or if you're losing to the S&P 500. Yale didn't care about that. They said, we want to make absolute return. So we want to make hardcore returns. If it's 1%, that's fine. If it's 2%, that's fine. They don't want to beat the index by 1% or by 2% because the index could be down. That's an example of relative returns. All right. But absolute is like, all right, it's 2% up over 2% down. We don't really care about any of the relative benchmarks. All right. So I want to go back and get you a definition of absolute return so that y'all can understand it. All right, the portfolio is invested in 2 broad categories: event-driven strategies and value-driven strategies. Event-driven strategies rely on a specific corporate event, such as a merger, spinoff, or bankruptcy restructuring, to achieve a target return. Value-driven strategies involve hedge positions in assets or securities. If y'all don't understand any of these terminologies, put them as questions, right? Put the Q in front of them and throw them in the comments, and I will explain them for you. Just lost my spot. All right, so value-driven strategies include hedge positions in assets or securities where prices that diverge from their underlying economic value. Today, the absolute return portfolio is targeted to be 23.5% of the endowment, above the average educational institution's allocation of 20%, to such above the average educational institution. Oh, I'm sorry, I read that over again. Absolute return strategies are expected to generate a real return of 3.5% with a risk of 7%. So here, again, we are going back to risk. You cannot take risk out of investments at all. All right. If you're not talking about risk, you're playing. You're gambling. You're not really investing. All right. So absolute return investments have historically provided returns largely independent of overall market moves. Over the past 20 years, the portfolio exceeded expectations, running 8.1% per year with low correlations. Now, if y'all been rocking with me, y'all know I talk a lot about correlation. Correlation is very, very important. Now, they want this investment to move independently from the overall market. You hear people talk about diversification. You'll hear me say people who talk about diversification usually don't know what they're talking about. They're only talking about the stock market. You cannot truly achieve diversification only in the stock market. Why? Because diversification, all the assets that you have in diversification or different asset classes are supposed to move in different ways. They all can't have the same characteristics. If you're only investing in the stock market, you're not really diversified. I don't care how many mutual funds you got. I don't care what's going on. You can get some level of diversification, but you can never truly get true diversification because all market things tend to run together. All right. All right. So equity owners reasonably expect to receive returns superior to those produced by less risky assets such as bonds and cash. So now we're talking about equity stocks. The predominant asset class in most U.S. institutional portfolios, domestic equity represents a large, liquid, and heavily researched market. While the average while the average educational institution invests 21.7% of assets in domestic equities, Yale's target allocation to this asset class is 2.25%. So here Yale is breaking away with everybody else. They're doing their own thing. They're like, I don't want to follow you. I don't want to be a sheep. I want to stand on my own. I've done my own research. I don't want to necessarily follow the herd. All right. There was something else here that I thought was really interesting. And it says, despite recognizing that the U.S. equity market is highly efficient, Yale elects to pursue active manager strategies, aspiring to outperform the market index by a few percentage points net of fees annually, because superior stock selection provides the most consistent and reliable opportunity for generating attractive returns. The university favors managers with exceptional bottom up, meaning that they want to pick companies. Bottom up strategies mean they want to pick companies that really outperform, right? Because some companies are top down, or some investors are top down, other people are bottom up. Top down starts with the economy, right? And how they filter things and how they look at things and how they color their universe. Bottom up investors look at what's so special about this company, right? So one is a group thing, the other is kind of an individual thing, if that makes sense. All right. So then it breaks down here. Foreign equity investments gives the endowment exposure to the global economy. All right. I'm not going to bore y'all with that. Leverage buyouts. Leverage buyouts offers extremely attractive long term. The universities, I was hoping it was going to give more. I thought they gave more definitions. Yale's leverage buyout strategies emphasizes partnerships with firms that pursue a value-added approach. Such firms work closely with the portfolio companies to create fundamentally more valuable entities. All right, but so leverage buyouts are, if you ever watch Wall Street, they will take some of their own money. They will borrow money from the banks and borrow money from other people to go buy a company. That's what leverage buyouts are. All right, natural resources. All right, I'm going to just put this back on the screen. What are natural resources? A lot of times natural resources could be mines, right, for minerals like gold and silver. It could also be trees, all right? Real estate, I think everybody knows what real estate is, right? But real estate actually is broken down into several different asset classes inside of real estate. For example, you have commercial buildings, you have residential, you have warehouse. There's many others. So there's they're going across different aspects of real estate. It's not just all getting a duplex or a triplex and getting somebody to rent it. They're doing something totally different. They're doing something totally different. All right. And then there's venture capital. Venture capital is taking early stage companies, giving them some money and helping them to grow and become bigger companies. A great example of that, right, would have been Uber. Not too long ago, we saw that Facebook got funded from venture capital. A lot of these early stage companies who have great ideas. All right, cash. I think everybody understands what cash is, all right? And here it just shows what Yale's doing versus all the other education. Now, again, I want to preface that. The reason why I'm talking about this is because you too can do some of the very same things. All right. You can utilize this in much of the same way. So again, I don't want y'all to be bored to death just listening to me talk, but I want to show y'all something else real quick. And I want to test something. Y'all let me know if y'all can hear this. So do me a favor, put a 1 in the chat if you can hear this. Y'all see that? Do y'all see that? Do y'all see those numbers? So from June 1998 to June 2008, 20 years, Yale did 16.3%. Your average college endowment did 6.5%. The S&P 500 did 2.9%. All right. So you got to take a look at this. This isn't your average. I'm going to just pick up a stock. I'm going to get a hot stock. All right. And I believe I'm not getting any sound from this. Y'all let me know if we're getting any sound. But let me start over. I want to make sure everybody can hear this. I want to make sure everybody can hear this. And I will go back to it because I wanted to show y'all. I wanted to show y'all this. And yeah, it does seem like the internet goblins are running a little slow today. They got all the comments running a little slow. All right, yep, now I see it. Can't hear it. I got it. Thank you, Hayden, for letting me know. All right, so this is talking about how Yale has had consistent 20 years of positive returns. All right, let's start this over again.
The way university endowments are managed all over the
Now, y'all can hear it now, right? Just put a 1 in the chat if you can hear it.
Country. He has been so successful and influential that he has set a new standard for a wide array of institutional money managers, from pension funds to foundations. And he was recently named to President Obama's new Economic Recovery Advisory Board. Well, how did he do this? His track record tells the story. Under his leadership, Yale's endowment generated 20 consecutive years of positive returns from 1980.
So 20 years of positive returns. So that means he did not have a losing year for 20 years.
Until June of 2008, the end of its fiscal year. In the decade ended June of last year, the endowment had clocked in average annual returns of 16.3% versus 6.5% for the average college endowment and 2.9% for the S&P 500. That performance put Swenson in the top 1% of all institutional money managers.
1%. He's in the top 1% of all money managers, right? How many of y'all have heard of this guy, David Swenson, right? If not, this is your first time introducing to it or learning about it, put a 1 in the chat.
And added an estimated $15 billion to Yale's endowment. Yale did not escape last year's market wrath. As of December, the portfolio lost about $6 billion or 26% of its value. But
all right, so everybody got tanked. Everybody got hit in 2009.
How did he generate those long-term results? Well, Swenson radically altered what Yale's endowment invests in. From the traditional mix of domestic stocks, bonds, and cash, he and his team switched to alternative investments. Their stake in private equity increased from under 4% to over 20%. In real assets like timber and real estate, the allocation increased from 8.5% to 29.3%, and in hedge funds from 0 to 25.1%. Meanwhile, the investment in domestic stocks and bonds plunged from over 70% to under 15%. Now, Swenson has literally written the book on university endowment.
All right, so I don't want to bore y'all, and I don't want to get any fair use claims, but I do want to show y'all a couple other things. I want y'all to be on the lookout for David Swenson, something for y'all to be studying and learning about.
Officer of Yale's endowment, David Swenson. David, it's great to have you here in WealthTrack. Thanks for joining us.
Well, it's my pleasure. Thank you.
So let me ask you about what you've done at Yale, because 24 years ago you arrived at Yale. You were at the tender age of 31, and their endowment was then $1 billion. As I just said, it went up to 22.9 billion, and it's now down to around 17 billion. But you decided to make some really radical changes in the mix of the portfolio. What was wrong with the old mix? What was it when you got there, and why did you decide to make those changes?
So when I arrived at Yale, it was April 1st, 1985.
Uh-huh.
You think there's an April Fool's joke there somewhere?
Perhaps, yeah.
I was totally unencumbered with formal investment management experience. And so the first thing I did was look around and see how it was that other institutions invested their funds.
Right.
I saw colleges and universities had, on average, 50% of their portfolio in U.S. stocks.
So what did he say there? He was unencumbered
U.S.
by how everybody else did it. He just wanted to figure out what worked right. And so that says a lot, right? That shows that he's open-minded, but he's not necessarily trying to follow the herd and be like one of the sheeples that are out here normally. And so again, I'm showing you all this is because I see a lot of folks following the herd. I see a lot of folks being sheeple out here. Nobody's doing their own homework. Nobody's doing their own research. But you see what can happen when you actually do some homework and do some research. Now, again, they got a whole team. But he took a different approach to investing and from what everybody else was doing and said, I want to try something different. And he backed it up with research. He backed it up with data. So, as you go into looking at your retirement fund, your church funds, your building funds, right? The scholarship funds, think about what's going on. Think about what your asset allocation is. Like, how much do you have invested in stocks? How much do you have invested in bonds? How much do you have invested in real estate? How much do you have invested overseas, internationally, right? What's in your currencies? What's in commodities? If you're invested in commodities right now, you should be making some money. Commodities, oil, wheat, all those things have been in play over the last couple of weeks, especially with Russia, right? As inflation's been growing, we've seen real estate run, right? So not just necessarily having a portfolio that's exposed to stocks, but looking at all the different asset classes and how they can help you over different market scenarios or different economic scenarios. So you gotta keep that in mind, y'all. You gotta keep that in mind. And so again, I'm seeing I'm seeing a thing. This got a little crazy. The internet is definitely not liking me today for some odd reason. Uh-oh. And so there's a couple of things I want to share with y'all as well. Also, Yale also has a lot of investment courses out there. I know everybody's selling their course. I'll probably sell one soon too. But there's a lot of good, free information from a lot of reputable people. Yale has some. There's a couple others. I keep saying I want to do a listing and put them all down so y'all could go look at them instead of just relying on the social media gurus out there, right? But there's a lot of free courses. Yale Courses has one. I'm going to throw this in the chat so y'all can have it. I'll also put it in the comment section of the YouTube video as well. All right, so but y'all start really getting down on these real investors who are doing their things. All right, and so let's see. Let me see if I can get back to that, because it's again these internet gremlins are giving me a hard time. All right, let's see. Here we go.
Alternatives.
Rock Sealy, how are you?
Think about that.
Kevin G, how are you?
From a common sense perspective and from a finance theoretical perspective, it doesn't make any sense. I mean, first of all, diversification is a great thing.
And it was even known back then
I want y'all to listen to this. I want y'all to listen closely to this.
1985 that diversification was a great thing.
Even in 1985.
Right.
And Harry Markowitz, who's probably the father of modern portfolio theory,
Yes.
says diversification is a free lunch, right? We teach our students in introductory economics there ain't no such thing as a free lunch, but diversification is. For a given level of risk, you can generate higher returns if you diversify.
And diversification means a lot of different things to a lot of different people. So in 1985 at Yale and a lot of other endowments, they thought they were diversified, right?
Well, maybe,
or no, or maybe they didn't.
Maybe they were diversified when you looked at their holdings of domestic equities, and maybe they were diversified if you took a look at their holdings of bonds. But there's no way that you can argue having 50% of your assets in a single asset class, US stocks, or having 90% of your assets in US marketable securities represents diversification. The portfolios simply failed that test.
Now, see, that's what I was talking about. And again, the internet's laggy, so I'm not going to keep going on. And plus, I don't want to get in trouble. I don't want to get copyright trouble. But like you said, if you have all of your eggs in one basket or one similar type basket, that's not diversification. That's just following the herd. All right. So I'm going to open this up for some questions. Again, we've been talking about asset allocation and how asset allocation can be used. Want y'all to start looking a little bit deeper at these investments, how they can be utilized so you can ramp up and protect, right? You got to think about protection when we're talking about investments as well, right? Risk is another form of protection, but how you can ramp up and protect your overall investments when it comes to your retirement, your kids' college funds, your church funds, right? The building fund at the church. There's so many things that you can utilize. Just having a broader mind and a better understanding of finance and money as it relates to our community, it would change things if more of us really got into things. Now, remember, if you have any questions, go ahead and put the Q in front of your question. Go ahead, throw it in the comment or the comment section. If you're on Instagram, hit the little bubble with the question mark, and I will get to it as we go along. So I see there's a couple of questions, and I know a lot of the comments are laggy today. All right, so again, super shout outs to Kevin for the $20 super chat. I appreciate you as well. All right, and so Ugly Mona says she's watched 3 or 4 of my episodes. Okay, cool. Now, I asked y'all a question earlier on. I wanted to know, have y'all been watching the daily videos and how have you liked them? So if you like them, put a 1 in the chat. If you hate them, put a 2 in the chat. All right. And then I also asked you another question. I might be asking y'all too many questions, so I'm getting a little too ahead of myself. All right, so Kevin says they went from investing real estate as their 5th largest investment in 2016 to their 2nd largest in 2020. Yes, because investing is a moving target. It's not always stagnant. It's not always stagnant. And that's not to be confused with being a day trader and sitting around and watching the markets all day. It's not the same. It's not the same. Hey, Akira, how are you? Hey, Akira, I appreciate you being very active on my channel. You're like leaving a comment after every video. You're in all the community posts. So I definitely appreciate you for all that. All right. So Jerry, my brother on the West Coast. All right. Thank you, brother. Down for you over on the West Coast. Thank you. All right. So Jose says, I'm currently researching bonds, corporate and municipal for addition in my asset allocation. Yes. And you can grab some ETFs that invest in muni bonds or corporate bonds. I want to say something, but Jose, I'll say it for an offline conversation. Well, I'll say this. I think a lot of times people look over junk bonds, and they can be really, really useful in your overall asset allocation. Not a 100% thing, but when you look at some of these companies that have got rated as junk, and you're like, these companies aren't going anywhere. It might be able for you. It might be an opportunity for you to get some outpaced reward without taking on a whole lot of risk. All right. So y'all been enjoying the daily videos. All right, cool. Thank you. Appreciate you. So Ugly Mona says, in order to have a 20-year winning streak, what is your comment on inside trading, or is it inside trading? It's not insider trading, right? Because he's not buying individual stocks. A lot of times what they're doing is they're figuring out what they want their asset allocation to be, how much money they want to put in traditional domestic equities, absolute return, real estate, venture capital, private equity, and then they're finding managers who do that very, very well. So they themselves are shielded from that. Now, if some of the managers partake in insider trading, then it will be on the managers. But what happens is when you're institutional, and I know this because I used to be institutional. I used to be an institutional portfolio manager. When you're institutional, you have all these consultants that will look over your fund, figure out what's going on, checking it out with a fine tooth comb. And so there are some folks who have partaken in insider trading, but not a whole lot. Not a whole lot. And again, like I said, there are multiple different eyes looking at this thing. Okay, so you think it's brilliant. All righty, cool. Good. I want to bring y'all things that are different than what all the noise. There's a lot of noise out there and it drives me crazy. But I want to bring y'all different things to market so y'all can think about it. So again, this isn't secret information. It's out there. I just showed y'all some YouTube videos and just did some Google searches. I mean, again, it's stuff I know about because I've been following and chronicling a lot of this stuff over the years, but it's not a secret. It's not a secret at all. All right, Jose says, I'm currently just under all the major indexes when looking back over 3 years. Okay, I believe you're saying under performance. But using a shorter time frame, 3 months to 1 year, I'm doing better than the Dow and the NASDAQ, but S&P is still generating returns higher than mine. So that's cool. And so what you're doing right there, that's relative, right? That's relative returns. Absolute returns don't really care about relative returns. Why? Because they have a goal and objective. So the reason why I say this strategy is very good for retirement is because you have a goal and objective. You know, you've been putting money away for X amount of time, and you know that money needs to then at some point convert over and become a paycheck for you. And what are you going to do? So you don't really care about how it does, right? Versus the averages. Now they do use the averages to say, if you're doing a good job managing your money or you're doing a poor job managing your money. But sometimes that black and white scenario misses out on all the nuance that goes into your overall situation. You have to be able to look at what your overall situation is and determine what's needed in your situation. For example, if you're looking at the S&P 500, the S&P 500 is down about 10% right now. If you don't deal good with risk and volatility, basically markets jumping up and down, you might not want to follow the S&P 500. You might say, you know what? My retirement number is, I need to get, for conversation's sake, $1 million. I need to get $1 million in the bank. I'm at about 500,000 right now. I got about another 10 years to go. I can put $50,000 into the bank. I don't want to lose that money. So that means I don't want to be looking at average returns from the market that's down 10% right now. I want to put my 50,000 in every year, and I needed to grow. So by the time I get 10 years out, in another 10 years, I have my $1 million. And then that $1 million can throw off, let's say, $50,000 a year, which is roughly a 5% return. So if you got $1 million that can generate 5%, right? This is just all hypothetical, y'all. These are not buy or sell recommendations. You say, now I can really plan out my retirement. It's not about relative. It's about, what is my feeling of risk? What is my level of cash flow? What is my level of income? What needs do I have? For example, I'm in a sandwich generation. I have children and I have older parents, right? Can be very frustrating at times, right? I told y'all the story about my 3-hour long trip to Arby's. Matter of fact, I got another story to tell y'all where my dad had me moving a refrigerator, me and my son, my youngest son, moving a refrigerator from a 3rd floor apartment where he house hacks at to put it out in the trash because he didn't want to pay somebody to put it out. So those are things that kids, and I'm also an only child, right? So kids that are in sandwich generations have to deal with that nobody else is thinking about. But I have to run my money the way I need to run it for me specifically. It's not a cookie cutter thing. And then you have to run your money the way you run your money because your situation is going to be totally different from mine. So you gotta keep that. You gotta keep that in mind. Keep that in mind. All right, Jerry Ehrlich says, Kamari, by chance, did you hear about the stock split with Amazon? It's 20 for 1. I hope I'm not getting off topic, but I just wanted to know, did you hear about something like that? Did I hear about something like that? I don't know. I don't know if I've heard about that. Do any of y'all think I've heard about anything like that? 20 to 1. Now, Jerry, I'm just having fun with you. All right. Just having fun with you. Of course I've heard about it. Now, let's see. Let's see if I've really heard about it. Just going to show y'all what I got here. Just want to show y'all real quick, because I like answering everybody's questions. I like answering everybody's questions. And Jerry actually does rock with me just about every day. Just about every day. He's usually about a day behind now. But he's in the comments. He always lets me know I'm his brother from the West Coast. So I appreciate that. I do. And again, I'm trying to show y'all something to share the screen with y'all, but YouTube seems to not want to. Yeah, it's not just YouTube, it's the internet. The internet seems to not want to cooperate with me. Let's see. I think it's coming up a little bit now. All right, I see we got a couple questions. I'll get to them in a quick second. Listen, if you're just now joining us, this is the Finance Rebel Show. This is our Wealthy Wednesday section where I answer your money questions live. And I like to go over a topic, right? Finance Rebel channel is all about empowering us to take control over our money. So we talk about things like taxes, business stocks, economics. If it's about money, we talk about it. All right. So Jerry wanted to know, did I talk about? All right, Jerry wants to know did I talk about YouTube? Excuse me, not YouTube, Amazon. Let's see here. So I talked about Amazon. I talked about Amazon today. See that right there? Amazon's 20 for 1 split. Now this is the back end studio of everything. That video is not performing that well, but it'll catch up at some point. I'm not super stressed. right? So yeah, I talked about it, 20 for 1. Amazon splitting 20 for 1. Right now, Amazon stock is at like 2,000. It's either 2,485 or 2,785, something like that. It's through the roof. And when they do this 20 for 1 split, it'll be about $150, something like that. All right, Kevin's on the ball there. Yes, sir. Yes, sir. All right, Kevin said, yes, he does. He posted a video prior to the show. Yeah, I'm out here working hard for y'all. And it's tax season. All right, so, yep, John says, a rising tide rises all boats. In the pandemic, I brought several things like F. F is Ford. I've talked about Ford several times, and Amazon, and I'm up. Questions. What is a trailing stop recommendation percentage? So a trailing stop recommendation percentage is how much should you sell, or how much. So let me back up. How much should a stock fall before your broker sells out the account? I'm not a big fan of trailing stops. I'll tell you why in a minute. But that's basically what it is. That's basically what it is. So let's say you're at 100 and you say, I want to put in a trailing stop of 5%. So if your stock price is at if your stock price is at 100 and then you want to put 5% trailing stop or a $5 trailing stop, when the broker sees it hit 95, it'll say, boom, we got to sell, and they're going to sell it out. But what I find happens a lot of times with trailing stops, which can be really, really dangerous, is that a stock might touch 95%, excuse me, not 95%, $95, and then jump to say 96 or 98 or 99. And so it only hit $95 for a minute. It wasn't really in danger. So, but that's something that a lot of traders like to do. A lot of times because it's a risk management. It's a risk management tool. And so there definitely does have its places for the level of investing that I'm talking about. You ought to do, talking about beginner investing. I don't really want any of you all looking at trailing stops. I don't want any of you all looking at trailing stops. Because again, you miss out on a lot of things when you do that. And if you need to worry about your money that tight, probably shouldn't be into it. Now, again, this is for my beginners. If you have ascended above beginners and you've gone to the intermediate or advanced level or super duper advanced, then don't pay me no mind. Don't pay me no attention. That piece of advice wasn't for you. All right, and so I'm going to put in here, Hayden just told me to put this in the chat, the Amazon video. So that's there. That's the Amazon video. And I talked about a couple other things. I've been doing updates daily, talking about Amazon, talking about the stock market, talking about the Ukraine. There's a couple other things that we had some big updates recently as well. All right, so Kevin says you're the second person I've heard speak about the sandwich generation. Yeah, it's a real thing. It's a real thing. Basically, I've got a generation above me that needs help, and I got a generation after me that needs help. And so I'm caught in the middle. All right, so folks are just talking. Okay, you just heard from Boyce, Dr. Boyce. Okay. All right, Kevin's laughing. I'm not sure what. I don't know. Did I do something, y'all? Okay, it's actually 2,700. Okay. All right, cool. I'm here to help. After hours is at 2,900. Yep, up 6%. Yes, Kevin Garland, that is correct. Now, it's up because people are like, this $10 billion, and I'm talking about Amazon, y'all, right? Amazon announced they're doing a stock split. They're going to make it easier for people to buy stock. I told y'all stock splits are very much a marketing ploy for the most part. But it jumped because people are like, oh, I want to get in line for this, because some people are triggered by the price. It's a psychological thing, because we can all buy Amazon right now with $1, one whole buck. Matter of fact, I got $1 right here, and I can buy some Amazon with my dollar right there. That's all I need. That's all I need, $1. And that's like behind the split. But I mean, because again, the value of the stock doesn't change with the split. And we can talk about that at another time. So yeah, I expect to continue to run. Oh man, yup, John. $10 super chat. Thank you. Appreciate you. Y'all showing me love. I appreciate y'all. So this is the Amazon video or today's daily video. I'm calling them the daily number. All right, Amazon needs to offer a dividend tied to their appreciation, no dividend. But listen, the dividend also, right? Dividend is a return of capital. This stock buyback or stock repurchase is kind of a form of dividend, right? Because there's multiple ways of getting investors their money back. So just keep that in mind. Yeah, listen, fractional shares are very, very powerful. They are definitely underutilized. They're definitely not leveraged in the way that we should be. Over 100 years span of time of investing in the stock market, you're generating on average about somewhere between 6 and 8% over 100 years. Now, again, some other people would like to see, the massive numbers that Bitcoin has returned and Ethereum has returned, even though it's volatile, right? Some people don't want that volatility. Some people just want steady as she goes because they don't want the agita or the heart pain from seeing their monies go up and down. We've seen Bitcoin fluctuate. And again, Bitcoin and blockchain are definitely the future. They're here, but stocks have not been knocked out the box yet. They're still here. They're still valuable. All right, so are there any other questions? If there are any other questions, go ahead and throw them in the chat. It's about 9:30. Y'all know I got to get my vittles. Let me get some water. Up in me. But if you, my wife got me this big, ginormous water bottle, and it's dope. The problem is I can't get the daggone straw out. So, but all right, what other questions do y'all have? Go ahead and throw them in the chat. Let's see here. Let's do something here. Let's try that. Hey, Nicole, how you doing? Hampton Author, how are you? Welcome. Miss Edith is over on the Instagrams. Welcome. All right, like and share for the algorithm. Appreciate you. So, all right, let's see. Did I miss any questions, any comments? Mo, I don't want to mess up your name, but is it Moyali 215? Welcome. If I said your name wrong, charge it to my head, not my heart. Definitely wasn't the intention. Y'all know I hate missaying names. Listen, if you're brand new here, don't know me from a can of paint, I'm Kamari Ellis. Welcome to the Finance Rebel Show. Every week on Wednesdays, we do this live to answer the community's money questions, right? We talk about stocks, taxes, business, economics, anything. I've been in the tax and financial industry for over 25 years, everything from accounting and tax to financial advising to portfolio management. Now, if you want to stay in touch with me and join my community, my text community, text me at 215-974-0058. Again, 215-974-0058. All right. So what else we got, y'all? Any other questions? What are y'all thoughts about asset allocation? What are your thoughts about institutional money management? I mean, we talked about HBCUs and how the real wealth gap, or one of the real wealth gaps, is between the endowments and HBCUs and PWIs, predominantly white institutions. So what do y'all think about that? Talk to me. So if nobody else has any questions, because I know we got a major lag today too. All right, I think the comments just jumped. All right, Kevin says, thanks, Kamar. You're awesome. So sorry I'm so late joining the video. Listen, it's a community thing. No need to be sorry. I appreciate you being here. I'm always humbled that everybody's here. I'm just here to help. All right, Yup John says, of your existing videos, what ones are your favorite? Oh, that's a that's a rough question. I'm gonna tell you, I like my interviews because my interviews, even though they don't do well on YouTube because of the algorithm, for whatever reason, they're usually jam-packed with gems. They are jam-packed with gems. If you want to take the time and watch them. Now, I know a lot of us don't like to take some time and listen, or if it's not super duper fun up front, but I feel like a lot of my interviews are awesome. One of my interviews I did with, let's see. I know one of the interviews, I did a couple of interviews with Serena Moore. She talked about government contracts. There's so much money out there with government contracts. It was good. Let's see. Let me shift this here. Now you got me on a whole other tangent. All right, Nicole says, I loved your interview with the female lawyer. So there's a couple of female lawyers, right? Courtney Richardson is a female lawyer. Rhonda Anderson is a female lawyer. Toni Moore is a female lawyer. I love, if you don't see a trend there, I like Black women lawyers. I'm married. I don't want any problems. I'm just saying it seems like there are a lot of Black women lawyers who are my friends. I'm just saying. But yeah, and they always are insightful and they always drop gems. So let's see here. Was talking about sports. I was talking about sports. I don't know. Let's see. So I'm gonna share the screen with y'all so I can show y'all this. Again, everything is moving super slow. But those, Yup John, those are some of my favorite videos. A lot of the interviews, because again, I get to learn. Because like I'm a listener. Like, I'll be honest, it's hard for me to talk to y'all all them because I want to listen. I want to interact with y'all. Matter of fact, at some point I'm going to do some kind of call-in show because I started in radio, and the reason why I fell in love with radio is because of the interaction. And so there's a barrier here with video that I don't get to interact as easily. So I want to remove that barrier and talk to you. And also I can bring some of y'all up as well. But I know a lot of people don't like to do video. But that's what I like. That's what I like. Like when I go do presentations, I always like to answer their questions because I don't like to talk at people. I want to talk with people. So conversations for me are some of my favorite things. So the interviews for me just hit different. All right, so I know I just did an interview with Erica Williams. She's super duper dope. Super duper dope. Let's see here. I'm going through some of my old Wealthy Wednesdays videos. I mean, I did enjoy covering the whole Jay-Z and Dame Dash. I'm a hip hop fan. I'm a huge hip hop fan, but I'm gonna tell you, there's so many gems, right? And I don't believe in making fun of anybody or judging anybody, but you can learn a lot from other people's mistakes. There's one person that says you're smart when you recognize your mistakes and you don't repeat them. You're wise if you can look at other people's mistakes and avoid them. So the Jay-Z Dame Dash thing, that's been going on for a while. Let's see here. You know what I really enjoyed? I did enjoy Young Dolph. Sadly, it was on the heels of him being murdered, but that man was a genius. Yep, here's Erica Williams. You know what? Michael Sneed was another one. Like most of my interviews, I really enjoyed because I learned something a long time ago. I interviewed all these people. People were just sending me, interview this person, interview this person. I don't interview everybody. Not because they don't have something good to do or good to say. If I'm not interested, it's going to be boring. And so Michael Sneed came on and he talked about how he's helping people learn how to make $500 a day doing home appliance repair. Like, that's phenomenal. Talk about a shortage. Now, again, if y'all been rocking with me for a while, y'all know I told y'all one day my wife was cooking and the oven just broke. So I still haven't had anybody come out yet. So I gotta basically buy a new stove and a new oven. Why is that there? Oh, and that one's live. That's talking about us. But there's more videos than that I have. I have to go find them. All right, so Ugly Boner has something. All right, Ugly Boner says, I think it's a brilliant idea and I'm wondering why we're not doing it. Well, some people do asset allocation. Some people don't realize exactly what they're doing. All right, Kevin says the disparity is always going to exist because of the head start that they had. Yes, it has. It is. It definitely is. However, Midnight Green just brought up Erica, right? So we did a show on Erica's channel, I believe, talking about the wealth gap. And Erica said something that I thought was really profound. She said the wealth gap is about $11,000, right, between black and white. And we know it's averages, right? But if you took the 40 million people, black folks that are in America, in the United States, and everybody just bought one $300,000 home, that would close the gap. Now, I know that's oversimplification. I know that is again really simple, or oversimplification. But some of this stuff isn't as hard as we make it out to be. And I am not trying to make an excuse for racism, white supremacy, white privilege, because all that stuff sucks. However, I'm in the place where if we're going to say that those folks are our enemies and they need to do something for us, I'm never in a position to say my enemy needs to do anything for me. To me, that's a exercise in insanity. So that just means we just want to stay on a hamster wheel doing the same thing over and over again. And that's why I really get frustrated when I hear certain celebrities that don't read and tell people that we don't need to worry about history. We only need to focus on the future. But as the great ancestor, Marcus Messiah Garvey says, we're only as strong as our roots, right? And so if you don't know your history, you don't know where you're going to go. And if you want to talk about it from a nature standpoint, trees, right? Trees have roots that go deep. They're able to pull water through, so they can take that water and filter it through the fruit. As they say, you can tell the fruit of a tree, right? So it's one big thing. It's a holistic thing. Being future oriented is very important, but you never want to do that at the sake of your history. But everybody likes to listen to some of these people, and I don't get it. All right, so yeah, so the one with Erica was definitely dope. All right, so Kevin says HBCUs need more support from everyone to close the gap. Facts. We have 1.3 trillion in buying power, but our resources go more toward things that don't have towards things that don't have any appreciation. I'm going to have to stop there. You ain't got to stop. You ain't got to stop at all. I mean, that's true. A lot of what you're saying is true. But we also had to do some other things, right? Because alone, individually, we're never going to get to where we want to go. We also had to figure out ways that we can work together. And listen, I don't mean everybody can work together, because they can't. I'm not looking for everybody to work together. I'm looking for realistic solutions. But if you've got someone that you trust, that you admire, that you respect, I think it only makes sense to say, how can we take our $1 and you take your $1 and we put them together and they make $3, $4, $5, $6, $7, $8, $9, $10. Because you can bring some of your talents to the table. Maybe I can bring some of my connections to the table. We can create synergy. I hate that word, but it's synergy, and do certain things. All right, so let's see. All right, it's very slow. All right, well, my apologies. Oh, he's referring to, oh, yes. That's my homegirl. I hate when y'all put me on the spot. Danielle Patterson. That's my homegirl, Danielle Patterson. Another Black female attorney who's super dope. See a theme here? There's definitely a theme here, y'all. All right, Jose says, I enjoy all your presentations because you offer easily digestible information. All right, I appreciate that. Thank you. Sometimes I do think that I'm being a little bit too technical. Jose, I know you do love the space though. So I think maybe you might give me a little bit more grace than everybody else. All right, so Chai says, I definitely enjoyed the video with you and Erica. That's how I found your channel. Okay, that's how you found my channel. Okay, cool. Thank you for joining. Appreciate you. You've definitely been an active participant over here. All right, so Ugly Mona says, very grounding discussion, enjoying it too. Yeah, listen, it's one thing to talk. I don't want to just talk about this stuff. I'm hoping to talk about this so you all can go and talk to your homeboys and your homegirls and say, listen, we can do better. We are great people. We can do better. And not just get caught up in the I was going to say menagerie. You're going to be like, what the hell is a menagerie? But get caught up in the shenanigans of everyday life. Because again, there's so much more. There's so much more to things. And if we do some things that are not what everybody else is doing, we could actually make some things happen. All right, so I'm just looking at some more of my videos here because I'm still intrigued by that question about what videos are my favorite. Let's see here. So this is my Black Wealth list. This is a playlist I have on YouTube right now. So I did some commentary on the J.R. Smith interview on I Am Athlete. I enjoyed that one. I'm starting to do more Black Wealth commentary because if y'all been rocking for a minute, y'all know I'm totally obsessed with Black Wealth. Now this Black Wealth Gap, 10 Ways to Destroy the Black Wealth Gap. I hate this video. This video is like 6 years old. I think it has like 20,000 views on it. I won't take it down because it still gets some views. And I won't take them down because I'm studying my growth, right? I'm charting my growth. But I enjoyed that one. While I hated it, I enjoyed doing it because it started a lot of things. Defining Black Wealth, Minister Farrakhan was one that I enjoyed doing. I'm a big fan of the minister. Now I'm gonna tell you, Black Titan, the Black review or the book review I did for Black Titan, A.G. Gaston's, that book changed my life. It was definitely gave me profound insights on things. If you don't know who A.G. Gaston's is, A.G. Gaston's was a man who was a business owner during the Jim Crow era. And he was so thorough, he was so fly that this man bailed out Martin Luther King from jail. Not only do that, throughout Jim Crow and throughout everything else, he became a multi-millionaire. Hotels, insurance, funeral parlors, things like that. I mean, he was doing it in Jim Crow. And so to me, if you can become a millionaire in Jim Crow with all the barriers, what's our excuse now? And so I look at those as like inspiration. All right, let me see. Like I said, Michael Sneed. Some of the book reviews I enjoyed a lot. I need to get back to them. There's a couple I have on deck that I'm going to do. You'll see them soon. Black Fortunes, Against the Odds, right? The autobiography of John Johnson. Like, for me, part of the reason why I like these book reviews is because I'm kind of jealous that these books weren't around when I was younger. But it is what it is. This is another one I had fun with, right? How a grandmother is planting the seeds of generational wealth. So this one is with Kim Von Bab, where I suggested to her, instead of buying your kids Nikes as gifts or Jordans as gifts, buying some stock, buying some Nike stock. And she did it. And she came back and she shared the results with me. But I probably need to look at, I don't know, retooling some of these titles, because I know titles matter on YouTube. I know SEO or search engine optimization matters on YouTube. So all of these things come into play. Now I would tell y'all, this video got me into a lot of trouble. Dear White People, 9 Ways to Help the Black Community. I enjoyed that one. I wrote a letter. JC Hustles will be a good interview. All right, Nicole, I like JC Hustles. I love what he's doing. Tag him for me. Say I want to interview him. I would love to interview him. But Dear White People, 9 ways that you can help the Black community, because I get sick and tired of all these folks pandering. Like, you got all these corporations pandering. Oh, we want to help Black folks. We want to help Black folks. All right, well, if you do, help them. Invest some money in the Black bank or deposit some money in the Black bank. And some of the corporations did. But I sent that letter out to my email list, and I helped raise some money for a local nonprofit that I'm on the board of here, the Philadelphia Association of Black Journalists. They raised some money. I just sent this out to another client of mine who is a non-Black brother. And he's like, yeah, I'm interested. Let me know what other thoughts you got, right? So I appreciate being vocal because I'm not crazy, right? I'm not coming with off the wall. Well, y'all tell me, do y'all think I'm crazy? Do y'all think I'm coming with off the wall topics? But here's the thing: if you want to pander, you want to say you want to help the Black community, well, put your money where your mouth is. And so I just put them to task. Now, I sent it out to my email list, and I'm still getting emails to this day that they're just now seeing these emails, and they're like, I'm white and I'm not racist. Please take me off your email list. I don't appreciate this. This is rhetoric that I don't appreciate. It's just like the CRT people, the critical race theory folks that think critical race theory is bad. It's like, I don't get how you think history is bad. Now, there's a guy, I don't even know if I want to say his name, but I'll say his name is Andy Frisella, right? I like his podcast. I'm not sure what he is in terms of ethnic background, but I think he's a white guy. He's a little right-leaning. But his whole thing is about getting after it, getting to it, and I'm all for that. So much so, some of my Black friends think I'm a Republican. I'm not. I think both parties are trash. I think left is trash. I think right is trash. I think the liberals are trash. I think the conservatives are trash. You can go document that. No matter what some of these Black Republicans are telling you, you can go document trash on both sides. But Andy Frisella did this whole show and talking about CRT and how it's bad because it's teaching people to hate the country. And then he's got this Black co-host that's like co-signing and stuff. And I'm just looking like, wow, we really are not into the truth. No matter if we're Black, no matter if we're white, we just want to do what's easy. We want to do what's comfortable. But when does easy and comfortable ever get us to resolution? Sometimes you have to have, what do they call them? Courageous conversations in order to get some breakthroughs. And sadly, there are a lot of white folks that say, I'm not a racist. My people weren't the slave owners. Well, we know that, right? Because the majority of white folks during slavery times were not slave owners. They did not own plantations. However, they might have worked on plantations. They might have helped in institutionalizing racism and slavery and Jim Crow and Black codes and redlining and so many other things. So a lot of white folks get to take advantage of this caste system that's created here in the United States. By the way, great book to read if you want to understand race and all its different layers is Caste. That's a great book. But those are some things that I think we got to have real conversations. Because here's the thing, and I know I might get some flack for this. We're not leaving. Black folks aren't leaving. Now, you can call me integrationist. You can call me apologetic person. You can call me whatever you want to call it. But I'm a realist. We're not leaving. And so at some point you have to say, we're not leaving. What are we going to do here? What are we going to push forward? What claim are we going to stake? So, I mean, to me, that's realism. That's realism. All right, DC, thank you for the super chat. $5 super chat from DC. I appreciate that. Says, thanks, brother. I've been researching the financial pyramids from last week. Yes. Yes. All right, please research that. Let's get to the basics, y'all. Let's really master these basics, and then we can become super wealth creators once we get these basics down. So DC says, I've been researching financial pyramids for last week. It helped me a lot when looking at my financial portfolio. Well, listen, I'm all about finance, right? I do a lot of accounting work, but I am a finance guy. So thank you. Thank you for taking my advice. I'm humble. Appreciate you. All right, so Kevin Garland says, sorry about the typos. I'm typing fast. No apologies needed. We're just having a conversation at this point. All right, I'm typing fast. Attention to detail. Gotcha. Okay, Akira said, all right, Kevin said facts to Akira. I think I missed that. Akira, what did you say? So Ugly Mona says, can we connect with HBCUs and share the David Swenson video and do a show on that? I'm not sure I understand the question, Mona. Can we connect with HBCUs and share the David Henson video? Yeah, I mean, it's on YouTube. David Henson, it should be known because, listen, a lot of these HBCUs, they do have institutional money managers working with them. One of the biggest problems with HBCUs, alum aren't contributing enough. Previous HBCU alums are not contributing enough. Now, if we get into the nuance of this, alum don't make as much money as some of the PWI alums make, but there's some money there. There's some money there. We just have to make it a priority. But yeah, I mean, you can share it with them. I would love to talk to some of them about it. There's a lot of HBCU pages out there and folks, but I mean, there needs to be a major push for HBCUs to support more HBCUs. And honestly, like real talk, since HBCUs produce the most Black professionals out of everybody, it shouldn't just be HBCU alone. It should be all Black folks should support HBCUs. I am not an HBCU alum. I'm just an HBCU fanboy. Just real talk. I graduated. I went to community college here in Philadelphia. Then went to Temple University. I wanted to go to Howard. Could make it. Maybe one day I'll get to go grad school or something like that. But the way my savings and retirement and my kids, all that savings accounts is looking, I might have to delay that or forego it altogether. Right. But I'm down for buying the merch. Right. I do that. Y'all see me buy her merch. Y'all see me wear Jackson State, Howard University. I just ordered some Morgan State stuff. Y'all told me to buy Lincoln. I'm going to buy some Lincoln stuff. Some Lincoln University merch soon too. But all Black folks should be supporting all HBCUs, all of them. Why? Because they benefit the community. And I know they will land grant schools. You can miss me for all that. Most of the people aren't Black. I know, yada, yada, yada. Here's the thing. It supports Black people. So I'm for anything that supports Black people, period, point blank. All right, so I think all Black folks should support HBCUs. Just my opinion. All right, Jose says, tomorrow I'm sitting down over lunch with my coworker who wants to start investing for her children. She watched me one day listening to your channel, oh cool, on YouTube and wanted to know why I was so attentive. All right, well, tell her to come on the channel. We could talk about it. We could have fun. But yeah, I mean, because Jose, you actually have a real love for the money, right? You have a real, not love of money, right? The Bible verse that is often misquoted, but you understand the power of the money and what it can do for our community, right? And so keep that in mind, right? And that's why I always say that money alone isn't enough. You got to have money plus cultural competence. Again, money plus cultural competence, because you see, when a lot of us get some money, we do a lot of goofy stuff that really doesn't benefit the community. And by the way, there's nothing wrong with you living nice, getting some steak and lobster, getting some surf and turf, maybe even getting a nice car. But at the end of the day, for us, Black folks, African descendants, living here in America. It's not about flossing. It's not about getting materialistic things. It's about our babies don't have books in schools. It's about our babies and our adults, right, don't have good food. We still have food deserts. So, oh wow. So shout out to Keith Muhammad, right? Keith Muhammad is a member of the Nation of Islam, introduced me to the Nation of Islam when I was a kid, teenager, helped me out understand a lot of things. When you go and you research a lot of the programs that the Nation did, they all would work for us. And I'm very much inspired by the Nation. I just showed y'all a review I did of Farrakhan, right? A lot of those things we should be adopting and doing ourselves, regardless of religion, because I know somebody's gonna say the Muslims only help the Muslims. Yeah, well, but there's no patent on great ideas. And so we can still take some of those things, Muslim or not, and put them to work and be for the benefit of our community. And again, you can benefit from it as well, but again, you got to do it with some cultural confidence. Junior's watching detail. That's my son, y'all. Shout out to Juniors. But again, you know, a lot of us are thinking about the chain, the flight somewhere. And again, all those things are cool, but I feel as Black folks, we always have to look at the bigger picture. We can't complain about schools being terrible. We can't complain about healthcare being terrible. We can't complain about all these other things that we're not doing everything in our power to change the circumstances. That's just victim mentality. And at some point, it becomes entitlement. All right, so Kevin Garland, that video breakdown was the best on that situation, hands down, over everyone else commenting on it. I shared that link like Scout cookies. Now, I want to know what y'all talking about. I'm lost. All right. Northern Bell. Hey, Northern Bell. Thanks for joining us. All right, Akira, the video is surely as satisfying as Girl Scout cookies. Now, I'm already a little fat. Still in the Fat Boy Club. I don't need y'all talking about Girl Scout cookies. I already got hit up early today by that. Okay, good book, White Fragility. Very interesting. I don't think I know that one. Is that Dr. Claude Anderson? Yep, another book is Black Labor, White Wealth by Dr. Claude Anderson. Yes, Dr. Claude is a G. I met Dr. Claude actually in Philadelphia many years ago when he did a summit here. I can't think of the name of it, but I got the meeting. My firm was involved. My firm was actually a Black controlled financial planning firm at the time, and we helped the sponsor. I can't remember the name of it. We helped the sponsor, but he was the keynote speaker. And so seeing Dr. Claude also influenced me as well. Seeing Minister Farrakhan got to influence me as well. Also being a product of a Black-owned business, which is my father. And I just mentioned those Black controlled / Black-owned Black companies also helped me as well, because I'm a product of Black business. So I was talking to my dad about this the other day, and he said, "You're always talking about Black-owned business." I said, "Yeah, I'm a product of Black-owned businesses. Can't talk about nothing else." I can juxtapose some things, right? I did work at other PWI firms, right? White firms, but I am a product of Black business. So I'm always going to shout out, promote, acknowledge Black business. And I think it's retarded and goofy if you're Black and you're not doing the same thing. Just being honest. All right, I don't know who Robin D'Angelo is, Kevin, but it looks like you and Shakira got your whole thing going over. Oh, okay. All right, so referring to the video I did, the video breakdown with the Brian Flores situation. Yeah, that was fun. Listen, I don't know everything, so I like to bring my friends on, especially, clearly we talked about Black lawyers, right? Black female lawyers, I love to bring them on and talk about some things. Now, I do have a couple of projects in the mix. I'm gonna be sharing with y'all some of these passion projects I'm working on. But I can't just share them just yet, but they are there. Hopefully you'll enjoy those well. These are interviews with other money professionals. I'll just leave it at that. Okay, and you also enjoyed the appliance business in South Carolina. Yes, that's Michael Sneed. He's in North Carolina, actually. He's right outside of Raleigh and Charlotte and all of that. And so I think I got all the comments, questions, concerns. I ain't had no vittles. It's 10 o'clock. Y'all not gonna keep me here all night because I gotta come back tomorrow and do another video. But again, I asked y'all a question. One question. How do y'all like the daily videos? And then the second question to that, do y'all think we should go back to our Saturday's Wealthy Conversation? Moving our Wednesday to Saturdays, right? Since I'm doing a video every day now as a test. I want to see if y'all really like it, if y'all really appreciate it. But jump in the chat and tell me what you think. Let's see. As we get ready to boogie out of here. So listen, Jose, you ain't said nothing but a word. I love me some Tiffany Aliche. She's probably my favorite guru, and I don't want to call her guru because I use guru in a kind of negative light. But she is my favorite financial. Well, she's not my favorite. She's one of my favorites. Her Kevin Matthews is another one I really, really appreciate as well. But Tiffany Aliche, I just feel is like super duper dope. And I haven't missed her be all point or misspeak on anything else. Now, there's a lot. I'm gonna tell y'all, sometimes I wonder if I'm a hater because I watch some of these folks and I just be like, you're not really that good. And not because they're bad people. I just feel like some of the information they're delivering is a little off. Or it's, I'm gonna be honest, I feel like a lot of folks that put their information out there is white privileged. It's white privilege centered. So it's black folks that, in my opinion, are promoting white privilege dogma, white privilege propaganda, white privilege rhetoric. And I'm not really a fan of those. Like, so for the folks who always talking about the bag and getting swaggy, that ain't what it's about. But I also realize that comes at a cost because I'm not the guy that's going to talk about that stuff. And I know that's what the algorithm and the / people want. I'm not pulling up with no card just for the sake of getting views. I'm not pulling up with no fur. Like, first of all, well, I don't even want that. I ain't getting no fur. I'm not getting the fur. I'm not a rapper. I'm not an entertainer. I'm not doing any of those things. So when I see some of my, let's call them contemporaries for lack of a better term, doing some of that, it really makes me scratch my head and be like, what are we talking about? Why are we promoting that? That's not what it's about. But guess who wants it to be about that? If you look at everybody who we've been complaining about, groups of people, I'm not talking about individuals, but groups of people, it behooves us to continue to use all these other non-black businesses that we spend all our money on. And I get it. Now, I'll be totally honest. For the most part, I highlight black-owned businesses there. There may be a time where I highlight non-black-owned businesses, but I'll tell you this, it'll probably never be more than 90%. Well, let me say that again. It'll never be more than 10% of non-black-owned people in business, because that's what I want to promote. That's what I want to push. But at the sake of promoting the channel, pushing the channel, having the conversations that I feel need to be had, I had to be strategic about it as well. Yep, Howard, you does rock. Professor Greg Carr, if any of y'all have a chance, watch Professor Greg Carr. I think his stuff is masterful. I think he does an awesome job. All right, so Ugly Mama says yes, and yes, this is my first show tonight, and I loved it. Okay, so she was saying yes, dailies, you like the dailies, and you like Saturday. Okay, cool. All right, Jose says any Saturday would work as well. Okay, cool. All right, Kevin says any knowledge that you provide is food for the mind. Yeah, that's what I'm trying to do. I'm not trying to be nobody's leader. I am trying to share. Oh, You put that up there. All right, hold on. Let me stay on course. I'm jumping around too much. So I'm not trying to be anybody's leader, but I am trying to put something different out there to say, listen, y'all, there's a bigger game at play here that we even are realizing, right? There's something bigger at play that we are missing. And so we can sit here and we can talk about getting all this money, getting these foreigns and getting these luxury cars. I've said for a long time, can we not make screaming about foreigns and luxury vehicles the thing, the cool thing? Can we make screaming out black-owned businesses the thing? Why? Because it benefits us in every facet, from unemployment, right? More black-owned businesses tend to hire black people. We know the unemployment numbers are not fair, right? Black unemployment is always higher than national unemployment or white unemployment. So it makes sense that the 2% that we spend, now, Kevin, you said it was $1.3 trillion. We spend actually supposedly this year $1.6 trillion. And if you divide that up by 30 million or 40 million people, it's not a whole lot of money. However, it's still divided. But if we took that and we only spend, let me back up, y'all. We typically only spend about 2% of black spending of that $1.6 trillion with black-owned businesses. So again, let me repeat it. We only spend about 2% of all black spending with black-owned businesses. And so Maggie Anderson, who I talked about a lot, asked the question, what if we just went to 10%? 10%. Now, that's going to take a little bit of focus, some dedication, and maybe some sacrifice. But that sacrifice would be really worth it, because when you get to 10%, it creates 1 million new jobs almost overnight. And so instead of going to a white accountant, find a black accountant. Instead of going to a white real estate agent, find a black real estate agent. Instead of going to a white insurance agent, go to a black insurance agent. Right? Little things like that would add up real quick. Real quick. But you got to always have it on the mind. If there's a black bookstore versus a white bookstore, if you want to order books, now I am guilty of this one, but if you want to order books, order from a black store, from a black bookstore, instead of just going to the mega conglomerate that's turning over and running everybody. But you got to think about it. Now, Akira, I didn't even see this, right? So he says, I love them. I can't. I'm in class with Dr. Craig Carr on Saturdays. I am jealous. How do I get into that class? And what time is that class? But yeah, Dr. Craig Carr is at work. He's a G. I love his stuff. He does the history, he does the research, and he always puts it in proper context and nuance. Like we be having these black and white conversations, y'all. We got to get to the nuance of the thing. All right, so I'm running my mouth. Michael Dennis is in the building. What's up, brother? How are you? Thank you for joining us. All right, say it again. Yes, white-minded money and me over everything. Mentality irks me. Yeah, it irks me as well. But people say I'm hating, so I don't know. Yes, okay, I got it. So y'all talking about Dr. Greg Carr. So yeah, another reason why I wish I would have went to Howard University. So maybe one day if I make enough money, I can go back to Howard. Or I can go to Howard, rather. All right. Oh, okay. So Hayden just let me know. And Class for Car is an online show on YouTube with Karen Hunter. Karen Hunter is another one I love. She's on Sirius. I got Sirius because of Karen Hunter and Joe Madison. I call Joe Madison my uncle. He's my uncle in my head. But I just love how he breaks it down. He puts it where the goats can get it. So I appreciate him a lot, especially as he talks about politics and the importance of it. And he typically always has it right. And again, love Karen Hunter as well. Like I said, I got Sirius because of them. Sirius FM. Now, all right, y'all. I'm going to wrap it up tonight. I appreciate you all as always. I'm always humbled that you're here. Listen, stay great, y'all. Stay great. Keep working, right? Don't fit into somebody's mold of what you are. You create your own mold. Remember, society doesn't really care about you. They just want you to be broke and in debt. They're not concerned about your God-given gifts, abilities, and talents. So one of the things you got to do to get to those God-given gifts, abilities, and talents is you got to rebel. So don't be afraid to rebel. Rebelling isn't a bad thing. It's just looking for the godly thing 9 times out of 10, because you say, I have something greater in me to do than what is average and what society wants me to do. All right, y'all. Y'all stay great. I'll see you next time. Keep searching for the light, and I'll be back tomorrow. Later.